Good day, AVZ traders. I trust you are well. Welcome to broadcast number 92. I'm looking at Nikkei 225, JP225. This is the structure that we have in terms of our AVZs, upper AVZ, highest asset valuation of yesterday, lower AVZ, lowest asset valuation of yesterday, midpoint, AVZ of indecision. Now, Nikkei 225 opens here. This is empty 4 times. So look at when Tokyo opens. When it opened, beautiful bear candle, good for the bears. But the problem is, without even measuring it, we've got less than 1 times risk reward to the lower AVZ. Immediately, you gotta say, well, there's a problem. The bears were strong and they are right within throwing distance of the lower AVZ. Why did that not break out beneath? So do nothing, wait. If they're strong, they'll follow through. And if they follow through and break out beneath this candle, because we're still looking for storage number 1 at the open, and if they didn't fail to get those storage number 1 at the open, when we do get the breakout, even if it becomes the first breakout, it becomes a large breakout, it is best and prudent to wait for storage number 2. And why? Well, you got it, guys, because if we put in the measured move of that first candle is going to be down here. So that's where the measured move is going to be. So if it's going to be there, even if you get a first breakout that becomes a large breakout, you're coming up against that measured move. So best to wait for strategy number 2. So we didn't get it. We just wait. Oops, I'm trying to delete that so we don't have too much stuff on. We wait and see what we get from the market. Bears tried again with this, failed. Now we are in the buy zone, lower AVZ buy zone. So when you get this, that is not a surprise, but we're still in the storage number 1, failed, failing. So we're not going to rush in and just say, well, I'm just going to jump into that. Wait for storage number 2, you're going through the mid AVZ. So that's beautiful for the bulls, completely reversed in the first candle, closing above the high of what is present high of today. Good for the bulls through the mid AVZ, and wait for a test of average prices. The test of the average prices came with that candle. It is a lost test candle. It is a bear doji. All it does, if it's not doji, bear low test candle, all it does is reduces the probabilities, but it is still a low test candle. It is still a test of the average prices, and that you should take. And all you got to make sure, of course, is you're using the correct stop. There is a measured move stop. And that's where it would go. Now we say we don't want to float our stops. Anyone want to guess quickly why it's okay to put our stop here? Well, you got it. We have a large breakout candle there, and the midpoint of it is here. So putting the stop beneath the body of the candle, which is beneath the 50% midpoint, is absolutely fine. You don't tighten it to bring it up to here, but because you see, okay, there's a technical level, I'm all right to put it there. I mean, had that midpoint been lower, of course, then you'll have to pull your stop a little bit lower. All right, so, if you're taking that, what else you'd be thinking? Well, you'd be thinking, okay, the bulls are strong from here. There is the first leg. There is the second leg. They'll likely want to get to the high of yesterday, but I'm taking that trade. And if you took that trade with that major move stop, you didn't quite get to 1 times risk reward because the bulls were not strong enough to accelerate up further, but you'd have had to exit anywhere within there and still made some good money. All right, guys. So this is broadcast number 92. It is failed storage number 1 at the open. Nikkei 225 we didn't get to break out beneath here, but we got a storage number 2, absolutely fantastic on Nikkei 225. All right, guys, take care. We shall catch up again. This is Dr. George, and bye-bye.